you need some credibility. So go in knowing a lot about what you want to do and make sure that you know what is going on before you talk to that broker, right?
Or just call Joel.
Or call Joel. Joel's a broker.
I'm just kidding.
Yeah, for a few $100 an hour, I'll help you with everything.
Yeah.
All right, what is up? And welcome back to another awesome episode of How to Invest in Commercial Real Estate. Woo!
Self-proclaimed awesome episode.
No, man, we're the best commercial real estate podcast in Jinx, Oklahoma. It's a fact.
All right.
Find one better.
Why don't we give them some information then? What are we talking about today?
Well, we've been working so long to get our new acquisition closed. It is an acquisition of a shopping center right next to Target in St. Louis. It's actually in Florissant, Missouri. It's got an out parcel that we are hoping to spin off. It's going to be a great investment. Anyway, we're closing that Wednesday. So last minute commitments, we may have room. Reach out if you are interested. But we've been working on that one a few months now.
Yeah, 11% cash on cash or 11.5%.
Yep.
Over 18% IRR.
I think we mentioned IRR a touch high last show. It's going to be, I think, 18.5-ish
Yeah.
target.
Yeah.
So,
like you said, we've got
decent sized deal, over $10 million.
Target and Aldi right next door.
Yep.
We've got, it's got great tenant mix.
100% leased.
Yeah, Panda, Chipotle, Ulta, Petco, Marshalls, American Freight. Did I miss any?
Michael's.
Yeah. So solid national companies.
Yeah.
It's a winner. I flew out there. Did you guys fly out there?
I did not.
I did not.
That's what I thought.
I don't fly out anymore. I took Joel's advice and
Oh, come on.
we're just gonna let you do it.
I didn't know I gave advice on it, but
That's great. I met Jake from State Farm out there. Broker helping us out on the deal. Thanks, Jake. He sent us the deal. Dude, every time I hear his name, I think of that stupid commercial.
Yeah, me too.
Such great advertising.
Did he have khakis and a red shirt on? No.
Okay.
What else we got coming up? Any other deals coming up?
Yeah, we're buying a shopping center. I was about to call it something else, but I stopped. We're buying a shopping center in Amarillo, Texas. Maybe one of the only shopping centers in Amarillo, Texas. But
That's a good thing if it's the only one.
yeah, Andy actually just left there. He spent the past couple of days, had 2 canceled flights, had to drive to Amarillo, so that sucks.
Yeah, through a
had
hailstorm.
to drive home through a few hailstorms. He was on a conference call this morning. He's saying he's holding his windshield in from caving because the hail was so hard. He's passing, flipped over 18-wheelers, and he's just on a conference call.
did his car get trashed?
I don't know. He just hopped off mysteriously, and it's like, did the hailstorm get him? I guess so. Anyway, that deal is cash flowing shopping center. It's modeling up really good. We got a really good basis in it, and we think we can raise the rents just because it's so expensive to bring new supply to the market right now, especially in Amarillo. There's not a ton of people developing in Amarillo, so a lot of sticky tenants, and we think we can get some good rent increases there.
When do you think we're going to be launching that? Because we do not have that up on the website yet.
We don't. Realistically, a couple weeks. 2-3 weeks, and I think we're closing July 8th, July 5th-ish.
Nice.
Yep. So excited about both of those deals. We're bringing back the cash flowing shopping centers.
Yep. Finally, yeah.
And we're making them work at in a high interest rate environment.
Yeah.
And so what's really going to be compelling is when rates start to come down a year, 2 years, even 3 years, we'll be in a really good position to increase cash flow, refinance, pull cash out. And hopefully the lower rates push prices and values of the centers up.
Yeah, and just even in the short term, I think a lot of the retailers are still expanding and doing well. And like I touched on earlier, it's so expensive to bring new supply to the market that rent is going to have to increase just because there's going to be more competition for those spaces. So anyways, without further ado, our topic for today.
Topic for today is how to prepare to leave your W-2. If you've been watching our show, you think you're ready, you want to do some deals, we're going to talk about what you need to do before you leave your W-2 job.
And I actually, not to be presumptuous, but I think that should be a goal of everybody in life, is to say, hey, how am I going to transition? And I know people that say, well, we do have that goal. I want to do that when I'm 70. Okay, great. But everybody should have that plan of how am I going to transition from my day job to working for myself or living off my passive income. And so we just want to talk through, kind of thinking in terms of how do I get commercial real estate to help me on the exit?
Yeah. So if I was contemplating this right now, my first question would be,
Brian, we already discussed it's for people younger than 70.
Okay. Well, I would go ahead and accept my Social Security check. I would sign up for that. No, actually, my first question is, am I going to have enough money like in savings or coming in, or what am I going to live off of?
Yeah. What are you going to replace that W-2 income with?
Yeah.
What are you going to replace your job with?
Well, commercial real estate, hopefully, but
that takes a while.
But that's the end game. Let's start them with how do they get started in building that income or that savings in order to be able to even consider leaving.
Yeah, so we've done a podcast on how one deal can change your life. It's really kind of there, right? So we need to be able to figure out how to buy a deal or several small deals or starting to get in the game of buying things before we quit the job. It's very practical that we could buy something before we quit our job. Maybe, again, several smaller deals. And to do that, you're going to need money, right? You're going to need lenders who are going to give you the majority of the capital to buy that deal, and you're going to need investors. So you can start talking to these people while you have a job.
Yeah. So to me, the hardest relationship is the lender relationship, because they don't want to give loans to people who don't already have real estate, right? They don't want to do commercial real estate loans without real estate. So how do you establish that lender relationship? How do you get a loan?
It's just focusing on the amount of money initially, right? The lender is giving you 70-80% of the money. So they're going to be a little more difficult. And yeah, they're looking for a balance sheet. They're looking for some sort of collateral to shore up the loan.
Yeah, it's the reason we put lenders number one is because when you go to buy your first deal, you can't do that after you quit your job and say, okay, well, I don't have an income and I don't own any commercial real estate, but I need a loan on commercial real estate. That's not going to work for you. So we recommend establishing relationships with a bunch of local lenders, because your first deal probably is going to be a smaller deal. You're not going to be able to get institutional money, and start talking to them. Hey, what size of a deal will you loan on based on my current situation, my current W-2 income? If I got this 2-tenant shopping center, it's really small, it costs $1 million, and I need an $800,000 loan on that. What does that look like for you? Yep. And the more relationships you develop, they're going to tell you, hey, this is what we need in order to get that done. I can't loan you $800,000, even though it looks like a nice deal, because you don't have any net worth. You need this net worth in order for me to give you that first loan. Okay, now we have that target. Or, hey, I need a cosigner. On your first deal, I want to see a cosigner, someone that either has experience or someone that can bring some net worth. Well, at least now you know what you're looking for. You know what you need to get in place so you can close on that first deal. But until you meet with lenders and they assess your financial situation, your credit score, your assets, your income, you're not going to know. So lenders are number one.
Yeah. Here's the beautiful thing about that too, because in the beginning, I personally hated that. I mean, it's weird. You feel like you're asking for money when, you don't have it, even though that's the purpose of getting a loan. And you think you're almost like bothering them and taking up their time. And then it suddenly clicked one day, and I realized they get paid when they lend money. Yeah. So when you go to them and ask for money, when you ask to lend on a deal, they're excited. They're building up a future customer. They're building up a future real estate customer that they're teaching how to lend and borrow money from that bank. That's their job. They're getting bonuses, and they're incentivized to do that.
Yeah, they want to lend. They want to lend you the money.
Yeah.
Yeah.
Hey, I got a suggestion for everybody listening. Is if you're scared about having that call, especially if you're in Tulsa, hit us up. We'll introduce you to several lenders here in Tulsa that will shoot you straight, that will tell you exactly what they want to see from you in order to loan on your first deal. If you're out of town, still, we can help you find local lenders, and I'll have that first conversation with you and help you kind of navigate through that.
You're such a nice guy.
I try. All right, what's the next one?
So next is establishing investor relationships.
Yeah, great. So now you know from the lender what you need as far as equity, as far as money in the bank and all that. But where's the down payment coming from? That's the next question the lender's going to ask you. That's going to come from your investor network. And so look, guys, it's going to start with friends and family, for lack of a better idea. That's what it is. But you got to start having conversations with people saying, hey, I'm getting into commercial real estate. Okay, great. Was that something you might be interested in investing in? And if they say yes, talk them through. Well, what kind of returns would you want to see? What would get you excited to put your money in a deal? How much investable money do you have available? Yeah. Is it 25,000? Is it 50? Is it 100?
What kind of properties are you interested in? Would you be interested in?
Yeah. What kind of properties get you excited? Would you want to make sure it's here in this market? Can I look nationally? Yeah. Whatever. And if you start with friends and family, most of them will be pretty honest with you about the situation.
Yeah. That works. It's great. I mean, I would start with, hey, what are you interested in? Maybe, but I would also kind of lead them. Maybe ask some leading questions like, hey, if I were able to acquire a shopping center like this, a small 2-tenant building for $1 million, and I could get these returns, would that be something you would be interested in?
That's a good point.
It's a great line.
A lot of the investors, they're not going to know. They don't know commercial real estate, so they're not sure.
That's what they're relying on you for. You're the expert.
They're not sure what kind of returns they can expect or what kind of properties are available. So, a few leading questions probably would be
advisable. Great points, because by this time, if you've talked to lenders and you're considering trying to begin your investing career in commercial real estate, you're thinking, I want to quit my job eventually, you should be able to model a commercial real estate deal.
If you can't model a commercial real estate deal, you do not need to be asking people for money. Let's clarify.
You shouldn't be meeting with investors if you can't model it. So you should be able to just pick random properties on the market, build the model, and see what kind of cash on cash you can deliver, see what kind of returns you can give investors. And that way, when you go to talk to them, you're at least knowledgeable enough on, hey, if things go the way I think they're going to go, and if my model's good, this is the return you can expect. Would that be interesting to you?
Yeah. And also, if you can't do a model, call Joel and he'll help you with the model.
Absolutely. Yes. It's very important that you just pick a deal and go through it, right? So even if you don't buy that deal, even if somebody else buys that deal, you stick with the deal because it's a great example. So you go to that lender, you get a prospective loan, you underwrite it because you can't finish your model without underwriting some sort of loan anyway. So you take the rough term sheet, you take the model, you take the offering memorandum, on the deal, and you put all that together, and then you just have a brief pitch deck, have a brief conversation with tons of investors. Hey, I've been able to talk to this lender. I've been able to look at deals like this. We missed this one, or we still have the opportunity for this one. But again, if we were able to get something like this in front of you and we had a reasonable timeline to get you comfortable with the legal documents, could you give me $50,000 or $100,000? It's a very simple conversation. You try to go get as many no's as you can. You'll accidentally get a few $100,000, maybe $1 million, maybe more.
Yeah.
All right, we had a third one.
So you're going to need help finding deals probably. So the third one that we like is to establish broker relationships.
And relationships with Joel.
Yes, that's right. That's number one.
So it's great because you don't want to get in a situation where you quit your job and you gotta hunt really hard just to find available deals. So kind of before all of this, you've talked to banks, you know how to model, you've talked to investors, you kind of have an idea of money you can raise. Now you want to have a source of deals flowing in where you have access to tons of deals that you get to pick and choose from. And so establishing broker relationships is probably the best way, but also getting to know all the commercial sites that list commercial real estate, like Crexy.com and 10X and LoopNet, and there's bunches of them. But that way you kind of have deal flow ready to go.
Yeah, I think an important thing on dealing with brokers is you need to know what you're talking about, though, right? You don't want to hit it. A broker doesn't want to waste his time. He doesn't want to waste your time or her. So you need some credibility. So go in knowing a lot about what you want to do and make sure that you know what is going on before you talk to that broker, right?
Or just call Joel.
Or call Joel. Joel's a broker.
I'm just kidding.
Yeah, for a few $100 an hour, I'll help you with everything.
Yeah.
I mean, deal flow is important, and it's hard to get good deal flow, I would say, because you can't just sign up and get every deal in New Jersey and California and all these states that you're not in. The first deal probably needs to be somewhat close to home. It's probably going to be with the local bank. It's probably going to be with local investors that can drive to that building and make sure you're not a complete idiot. We're first deal, right, guys? So that first deal, you need to know the market. You need to identify an area and an asset class where you're like, I have a lot of investors interested in that, whether it's retail, whether it's industrial, and you're going to know, okay, this is a good retail area that I can afford. And you just watch and hunt in that area if things are trading. And if it's a small area, you find a broker who's bought or sold shit in that area. It's like, look at the previous data. That tells you everything. And then you can see, oh, there's all of these deals that have traded in the past year. I could have bought some of those. Those I made some of these deals work. If that industrial building sold for $1.6 million and it's got these tenants in, I bet I could have made that work. There's a lot of ways to identify it. And again, it's going to take some time. And you're going to have to be able to speak to the market and why you chose the deal. And that time you spend in the beginning researching and looking for the deal will help and empower and drive a lot of that data and knowledge that you'll need to convince the lender and your investors and yourself to go and do this first deal.
Yeah, that's a good point. If you just found the handful of brokers that focus on retail in Tulsa, let's say. And there's only probably a handful of apartment or multifamily brokers. Mm-hmm. If you just had conversations with those and asked them, okay, can you give me a list of all the apartment deals that have traded in Tulsa over the last 2 years and the price points? So now you can go drive those apartments. You can see what price per door, the cap rate, the cash flow they had, and you can back into a model and get pretty familiar with, okay, this is what deals are trading for in my market. That'll give you so much knowledge to evaluate the next deal that comes out on the market.
Yeah. That was a good point in the underwriting of your apartment complex that you're acquiring right now, right? There's an apartment complex down the street that sold for more than your acquisition basis in this one that you're acquiring. Mm-hmm. That's a good data point to have for your lender, for your investors. Everyone wants to know that. Like, okay, we've got downside protection. Our basis in this seems to be lower than the market value. Yeah.
And if you brokers are such a good source of information, if you had a deal that you were considering, you could if you had a little bit of a rapport, say, hey, Joe the broker, can you take a look at this? I'm looking at buying this at this price point. Here's my model. What do you think based on the comps that you've seen, based on the deals that you've sold? Is this a reasonable price? Is this and they're going to tell you, yeah, I think that's great, or that area is a little bit tougher. And they're going to give you some great insight, and they should be an honest market professional. Yeah.
Should be, but in case they're not, get a few of those opinions.
Yeah.
So maybe, Joel, we could wrap it up with everybody's situation is different, but maybe you could, because you actually did that. You had a W-2 job. You started buying commercial real estate, and then you quit your W-2 job. Tell people, like, how long did that take, or what did you do? Can you kind of summarize that? Like I said, everybody's situation is different, but maybe you could give us your
because you didn't have a Joel. You didn't have a Joel.
I didn't have one.
Yeah, like we did.
Like all of the viewers have.
To call.
So how did you? Who did it?
So the last point we were going to make on quitting your day job is, my personal opinion. You don't have to replace your income, but you should consider replacing your expenses before you quit.
Okay. Yeah.
Roughly, right? So let's say, you make 80,000 or 100,000, but if you really pinch some pennies, you could probably live on 50 or 60, let's say. Okay, that should be your target. I don't know that I would want people to quit their day job before they had that kind of income coming in passively. And so that's what you got to focus on building. For me, it took me longer because I started so slow. I didn't even own a home when I started. I bought a rental house before I bought my own home. And so my journey, and I made a lot of mistakes because I didn't know what I was doing. Yeah, so my journey was a long one. I started investing in 2003, I think was the first year I purchased a house. And I didn't walk from the W-2 job till 2014. So 11 years. But if I had started on commercial earlier, then I may have cut that down in half. Yeah. This isn't going to be a 6-month journey, but if you got after it and got a couple of closed on a couple of deals, it could be a 12, 18 month on the early side.
Got after it. I love it.
Well, I mean,
it's funny.
Okay. Hilarious, Braden.
Get after it.
My suggestion would be set a target of passive income, and then based on your situation and how the investors you have access to and the lending situation, that'll dictate, okay, what deal can you do? $1 million deal is may cash flow, after your loan. Let's say it's cash flows $30,000. I'm just guessing, and you are able to get 30% of that because of your GP share. Okay, so that's $10,000 a year. Okay, you need 4 or 5 of those, right? And then you're in the game. And so just planning that out. But what we don't suggest is you do your first deal and you think this is easy. and maybe you're making 15, 20 grand on that, and then you just quit your job. Yeah. You're not covering your expenses. Well, now you're under pressure, and this game, you never know what's going to happen because you're a little bit at the mercy of market fluctuations. The market could downturn, interest rates could go up or down, deals fall out of contract all the time because of issues, and you never want to be in a position where you're under pressure and you're like, well, I got to close this deal anyway. I know the condition report didn't come back clean, but I get fees when I close this and I get passive, so I got to make it work.
Under pressure, yeah.
Or it causes you to cut corners because you're under pressure to cover your expenses, and you think that one more deal and I'll be able to pay my bills next month. That is not how to go about doing this business. You want to have that passive income because then your expenses are covered. So then you can wait for the deal that makes sense to you. Mm-hmm. And I think that's just really important. You're patient and you make sure it's the right fit for both you and your investors. Yeah.
Great advice.
What else? We cover it.
I think
everybody knows how to leave their W-2 job now.
How to quit your job.
How to quit your job.
So equally important, right? Depending on your salary, there's a lot of people who don't necessarily want to be the sponsor or want to own a deal by themselves. There's an equal way to do it. Again, if your salary is big enough and you can invest enough cash to just replace your expenses with passive income through investments with other parties and just as a limited partner, right? And then you don't have any responsibilities whatsoever. You've replaced your expenses or your income or surpassed that, and you can still quit your job. So equal alternative way that's way easier. You just have to earn more money from the W-2.
The high income earners, it's so much easier for you because what I understand about high income earners is they also have high expense lifestyles. And so what you can do is twofold there. I'm sure you have investable income if you're a high income earner, so you can invest that and start earning passive income that way, but you also have the ability to cut your expenses if you so choose. You don't have to have a massive lifestyle if you're really wanting to quit that job, where low income earners tend to have lower expenses and there just isn't much room to cut. Yeah. If you're making 50 grand and your expenses are 30, I mean, it's really hard to cut 30 down to something else. So those people are going to be able to get out of the game a little bit quicker. Yeah.
Anyways, that was a really good show. That's exciting. And we will catch you guys next week on how to invest in commercial real estate.